Welcome everyone. I hope you all are doing well. In this video, we'll be going over CRT, aka the candle range theory. So let's jump right into it. Right. So for those who don't know what CRT stands for, CRT stands for candle range theory. Now, this simply means that every candlestick that you see in the market is a range in the lower time frame. So if you see a candlestick on a 15-minute time frame, just know that that same candlestick is a range on a 1-minute time frame, or every time frame lower than the M15. So in this example here, this candlestick that you see is on a higher time frame. Let's say this is a 4-hour candlestick. It's on a higher time frame. So on the lower time frame, this very same candlestick is a what? Is a range. So here on the what you see here is the open of the candlestick, of the 4-hour candlestick, the low of the 4-hour candlestick. As you all know, the power of 3, when the candlestick is bullish, it will open and manipulate lower to create a lower wick, and then distribute higher to create a high, and then it closes. Same thing when you go to the lower time frame. When this candlestick opens, let's say you go to the M5 time frame, you'll find something like this, where the range of this candlestick will open here and then go down to create a low of this 4-hour candlestick, and then we'll have a market structure shift. Now we confirm that we're going where? We're going bullish after we have manipulated lower, and then we create a market structure shift, and then we distribute and create the high of the candlestick, and then we close inside. We leave this wick higher. You understand? So this is the range. That's why we say every candlestick you see in the market is a range. It can be a candlestick on the higher time frame, but when you go to the lower time frame, you will find a range within that candlestick, and that range is tradable. So let's move to the bearish example. Now this is our bearish example. Everything that you see here is the same thing with what you saw previously. The only different thing is the direction. So as you all know that when we're bearish, when we're expecting a bearish candlestick, we'll have the open, and then we'll have the manipulation higher, and then we distribute lower to create a low of the candlestick, and then we close. So when we go to the smaller time frame and use that same candlestick and look at the time from where this candlestick has opened until it closes, we'll see something like this. On the lower time frame, we'll have a range that has an open, a manipulation higher, and a distribution lower, and then we have the low of the candlestick and the close, most likely inside the candlestick. Now moving on to CRT examples. This on the left is a bearish CRT, and on the right is a bullish CRT. These three candles, the first candlestick, the second one, and the third one, the second candlestick must fail to close above the first candlestick. It must close inside. When it takes this high right here, this is a total soup, and then it closes inside, and then we'll reverse. Same thing here with total soup, this low right here, and then we close inside, then we draw higher. So let me show you the highest probable CRT that I use in my strategy. This here right now is what I wait for before I take any trade. If I don't have this, I don't trade. Simple. So what I wait for, I look for my bias. That's the first step. And then after finding my bias, I look for my PD array. And then the third step, when the market gets inside my PD array, I look for something like this. Same thing right here. As soon as the market taps inside my PD array, I look for something like this. For example, I wait for the first candle of the CRT. Let's say this candle taps inside my PD array. Let's say it's an auto block. I don't just go to lower time frames and look for market structure shifts to sell the market. No, that's wrong. I don't do that. I wait for the second candle to open, and this second candle must go above this high right here. When it goes above this high, I go to the lower time frame and look for a market structure shift here, or change in state of delivery to go down and target my sell side liquidity. Same thing here. When the market taps inside my order block, I wait for this one to open, and when it opens, it must instantly open and take out the low of the previous candlestick. Soon as that happens, that's when I switch to smaller time frame and look for what? For a market structure shift or a change in the state of delivery to buy that market and target what? The buy side liquidity that I have above here. I hope you all understand that. I'll be moving to the market right now to show you the real life examples and the trades that I've taken. Okay guys, before we begin, there's something I forgot to mention. My CRT is not just any random CRT. So my CRT is time based. I'm going to tell you the times of my CRT and show you how I trade it. I use two candlesticks. I use the 8 o'clock candlestick, the 8 a.m. candlestick, and the 9 a.m. candlesticks. Take note, I'm talking about New York time. For those who have their trading view set on different time zones, I encourage you to switch to New York time right now so that you can align yourself with what I'm saying right now. My CRT is time based. I look at the candlestick from 8 a.m. and the one at 9 a.m. What do I look for specifically? I expect the market to be inside a PD array when 9 o'clock open. Okay, so when I come to the chart a few minutes before 9, I expect the market to be already inside my PD array. Okay, and then I'll wait for the market to sweep, if I'm bearish, the high of the 8 o'clock candlestick using the 9 o'clock candlestick. As soon as that happens, that's when I switch to a smaller time frame, the M5 time frame, and look for my total soup setup. Okay, I will not like to see the 9 o'clock candlestick displace above the high of the 8 o'clock candlestick if I'm bearish. I would like to see rejections above and then a instant move down to show that we're displacing lower to indicate that, okay, this was a total soup setup. Okay, so let me show you the example. This will be our first example. I'll give you two examples. This will be the first example. This is the trade that I took. And then I remember when I took this trade, my target was on this low right here. Because I always target liquidity. I always target the opposing liquidity on the higher time frame. It's either I choose my liquidity from H1 or I choose my liquidity pool from H4. But most of the time I use H1. Okay, so right here, as you can see, I have my PD array marked here, the higher time frame PD array. Okay, and then the market tapped inside this PD array before 9 o'clock open. Okay, as you can see, this one is the 9 o'clock open. When it opened, the market was already inside the PD array, right? So this right here on the left is the 8-hour candlestick. Okay, so what I wait for the 9 o'clock candlestick to sweep or go above the 8 o'clock candlestick, right? Just like that. Okay, as soon as it goes above that, that's when I switch to where? To M5. So here on the M5, as you can see, this is our 8-hour candlestick high. Take note. Okay, so that's what I look for. I look for the market to sweep this high so that it rejects above and displays lower to show me that, okay, this was a total soup. Okay, simple as that. And then I look for a change in the state of delivery, a market structure shift, or an inversion fair value gap. So in this case, I got a change in state of delivery. Okay, this is my change in state of delivery right here. So this is why I took my entry. I took my sell right here when the market came to retest this order block right here, and my stop loss was at this high. My target was that opposing liquidity down there. Do you remember the liquidity I marked on the 1 hour? So moving on to the second example, as you can see right here, when 9 o'clock opened, we were already inside this fair value gap. Okay, that's the first thing that needs to happen. Once the 9 o'clock candlestick goes above the 8 a.m. candlestick right here, what you see here, we went above this high. this candlestick's high right there. Once that happens, I automatically switch to a smaller time frame, which is the M5 time frame, to look for my entry and target what the sell side liquidity right there. So let me show you how I entered. So here we go on the entry. So as you can see, this right here is the last candlestick of the 8-hour candlestick. And then the 9 o'clock opened, we went higher, taking out the high of the previous candlestick. So as you can see, we failed to displace above the previous candlestick. We had a aggressive move back inside the range and leaving what an inversion fair value gap right here. I took my entry on this inversion right here. This was my entry point. This inversion fair value gap was the bearish inversion fair value gap. I took my entries right there. My stop loss was at this high because this is the protected high. This is a total soup high. My take profit was at this low right here because it was my high time frame draw on liquidity. So it's that simple, guys. You just have to choose a certain CRT and then back test it and see if it works. And then if it worked for you, just to choose that one. But I encourage you all to go in the marketplace to back test the 8 to 9 CRT. Guys, you'll see magic. I didn't believe it when I found this at first, but now I can see that this thing is reliable. I can use it in every trade that I take. And I always, guys, always, actually, I always when I take a winning trade, I always thank this CRT because my win rate has increased ever since I started trading these kind of setups, guys. So I would like to thank you good people for watching this video. I hope this video works out for you. I hope it helps you in your trading. Thank you for watching. Peace.